guys, welcome to my channel. So today we will talk about a little bit about my strategy and how exactly do I trade. So I trade basically three ways. So one is breakout. This is the first way that I trade. Uh, Second is impulse entries, and third one is breakout and retest. Okay, so we will discuss about each of this method one by one. So let's start with the breakout. So okay, so let's say price is in an uptrend. Okay, so we are talking only about uptrend, uh, and we will not talk about downtrend or consolidation or anything like that. We will only talk about uptrend. So let's just say price in an uptrend and we are at the area. Let's just say you came to the chart in the morning at pre-London session or London session or whatever session that you are trading in. All right, so let's say we come when you come to the chart, you will see price in a range in an uptrend. So let's just say price has already uh, price was creating a bullish candle like this, and you see price has come to the area, price is already moving bullish, and price come to this area and then it starts ranging, right? So ranging, it means you have a random candles like some bearish candles. Sorry, let me just draw a bearish candle like this. Okay, there are some bearish candles, and they're coming down. We form a resistance at the top area. This is your resistance and this is your support. So prices are just bouncing from this resistance and support. So whenever you see something like this, movements are happening in the market, it means we are in a consolidation area. Okay, and there's literally nothing you can do in this area because there is 50% probability that price will keep on moving to the support and resistance and so on. So what you want to do in such case, that all you got to do is either wait for price to break if you're looking for buys. And trust me, if you are trading a trend, because what we say trend is your friend, then you only looking for buys in an uptrend. You can, there are ways that you can look for the sales in an uptrend, but for that all you have to do is wait for candle to either close below this area, and you have provided this clean range for price to push down, and then you can take a sell. So whenever you see, this is what we call a breakout entries. So whenever you see price breaking and closing below this area, and this is valid, I would say on a 30-minute chart, a 1 hour chart, these are the two basic entry time frames that I look after. 15 minutes, you can, yes, you can look at 15-minute time frame, but 15-minute are very weak confirmation. So generally I don't rely on 15-minute. I 13-minute and 1 hour considered as a strong support or strong resistance. So if 30-minute candle is breaking below this area, if this was a 30-minute candle, I would have executed by right sell right over here. I would have kept stop loss at the top, and I would have anticipated that okay, the next candle should wake up and start pushing to the downside. And we are talking only about two pairs, that is gold, South USD, and GJ. Okay, so then I would anticipate, okay, that these candles should respect the higher highs and higher lows, like this high, and this high of the previous candles, and they should travel to the bottom where we have a support down over here, and this should be a clean move provided that we have a clean candle to the left hand side. And same goes for a once again same goes for a bullish trend. So this was a counter trend in that we were talking about. So let's just say you are in the range, and price is consolidating, and you had a same movement to the that we discussed earlier. And then you have one kind of a candle which breaks and close above this area. Okay, so this is your bullish candle. Let's just say this is happening like at pre-London time or London Open, or after London Open. Then you would say, okay, that we are in an uptrend. Price has been ranging for a time being, and this candle has, and you might see there are some candles, those who try to push up, and then you see some sort of a candles that wicking, in this area. You'll see some sort of such kind of candles in this area. Then you said, okay, all these candles could not break. Okay, 1 second. All these candles could not break above this area, this resistance. And if this candle has broken the resistance, then there is a very very high probability that the next candle should wick down, and it would 1 second, sorry for the. So you would anticipate that the next candle should wick down, and it continues to pushing to the top side, and making higher highs and higher lows. This is what we call a breakout entries. And provided that you need to have a 20 30 plus, I would say 30 plus pip range to the left hand side, and you should have a clean price action like we had over here in the bullish trend. Okay, so let's just jump to the another entries that I generally prefer to do in the market. This kind of entries I only prefer when there is a very high amount of volume in the market. Okay, so right now we will talk about impulse entries. What are the impulse entries? Let's just say you are in an uptrend. Price is making higher highs and high lows. Let me draw some candles. Okay, price is making, this is a bullish candle. The next candle, it is wick down and start pushing up, and you are getting all this strain. Okay, you are getting these trending candles. Oh, sorry, you are getting this is your candle. 1 second. So this is your bullish candle. Let's just say this is your candle. Okay, and you would see, okay, price has just broken the resistance that we had earlier, and prices started pushing up. So it's very risky if you start taking entries right over here, or maybe the next candle that is pushing up, and you start taking entries after this candle breaks. Like you have 3 4 bullish candles in one direction. This is very risky kind of entries. So what you, at this point there is nothing you can do. All you have to wait, all you have to wait is for price to come down, create some sort of a market structure like this. Let's just say price needs to come down, um, and create some sort of a bearish candle after a bullish candle. Let's just say we are coming down in this range, and we came down further to test this. Let's just say we had a support area over here, and you had a movement that started from here, and you see a candle that has formed bullish in this area. This is what you call a breakout and retest entries. So let me just tell you that. Okay, so let's just say you have missed this move. Okay, you have missed this entire move. Now all you have to do, that price to come down and create a support. But if you're looking at the pairs like gold or GJ, they usually don't come back to this area and to retest this. They don't. This kind of move don't happen always. They don't happen often. So what candle will do is that the next candle, it will create a bearish candle. So you would say, okay, we had a form a resistance. This is a resistance area. But as soon as this, and at this point I would anticipate price to come down and create the market structure that we had drawn before. But what candle will do, it will wick down, and it will start breaking the high of the previous candle, and this candle will start moving like this. As soon as this candle, as soon as this candle breaks the high of this candle, I would enter with an impulse entry. This is a perfect example of impulse entry where price is trending bullish. Price created a resistance. Price have created resistance. The next candle wick down and it starts breaking the high of the previous candle. Boom. My impulse entry goes right over there. And if you take an impulse entry like there is very less likely that you're gonna see candle closing like this. You're most likely gonna see candle closing mostly like over this, and this candle becomes your 20 pip or maybe 30 pip candle if you're trading gold especially. So if you wait for candle to close in your direction, then you are probably getting a late entry in the market. But if you, in this scenario, if you wait for candle, if you wait for the impulse entry, if you wait for the right kind of impulse entries, then you probably have a good entry. Second thing, you entered here, your stop loss goes right below this candle. So it means your stop loss should be like 15 pips to 20 pips. But if you enter at this area, then your stop loss is become 30 pip or 40 pips. So which makes really no sense because I usually tends to have my stop loss between 15 to 20 pips. So when to take impulse entries and when for wait for price to come back and retest, it's come with experience. You need to have at least 6 months of experience looking at one particular pair. Okay, then you will start anticipating these moves in the market. These moves, you won't be able to identify these moves if you are new to the forex. Like if you're trading gold for the, like, let's just say like 2 3 months, it's not going to happen. You won't be able to see these moves. You have to wait. You have to just keep on watching that but one particular pair, for example gold, and then you will be able to understand, okay, if this gold has been doing this constantly, and there is very high probability that it will just keep on moving upside and it will create some this kind of move which will just give my daily target of 20 30 pips. So this is the classic example of impulse entry, and same goes for sales. Like for the sales, whenever candles are printing like this, price is coming down. Oh, I think I had some internet issues. Wait. Okay, sorry for the interruption. I think I had internet issues. I think it's just got disconnected. Just check. Yeah, I think should be fine. Yeah, sorry for the interruption. So this what we were talking about was for the same scenario. So price is creating, price is trending down, and impulse entries are only valid when you are in a trend, either in uptrend or in the downtrend. So be have a clear mindset about this. Does price do this, and the next candle it prints kind of a weak bullish candle like this, and the next candle creates a top wick and it starts breaking the low. uh, Boom, here goes your impulse entry, and then the same scenario you should be seeing for the cells. But this only happens when there is a good amount of volume in the market. Volume is going to be the only key where you're gonna make your most of the money, and you're gonna see a big moves like 70 80 30 40 pips move. You're gonna only see when there is enough volume in the market. And when you have to always ask yourself once one question, that when there is a volume in the market, at what time volume usually comes, and you'll get your answer that volume comes during pre-London, London, pre-NY, and New York, then NY, there is NYSE open. These kind of, then there will be a London close. These are the timing where you will see maximum amount of volume in the market. And last, we will talk about breakout retest. We already have discussed this, but I'll just draw simple price action over here. Let's just say we are trending up in this range, and suddenly you'll see candle that is breaking up. Let's just say you missed this entry. Okay, you were not present in the market, you were doing something, you were at the job, you were at the meetings, and let's just say you missed this move and you were not there in the market when this move happened, right? So let me just draw this again. Let's just say you missed this move, and note down one more thing. The more price go from this range, this zone, there is a high probability of price to come back and retest the that zone. So price always tends to stay, means your entry has to go near this zone or either at this zone, so that whenever you enter over here, so there is a high probability that that price will go up. But whenever you enter over here, there is a very high probability that price will come down and retest this area. This is the market structure. This is how market moves. This is a basic, what you can call a cosmetic of the market. Whenever price go up, it has to come down. Market moves like this. Market never moves like this. Oh, it's going like this, or up and up. And there are some days where you're gonna see only up movement in the market, especially during news, or maybe if you have some political events happening in the world or across the globe. But those are the very rare chances that's going to happen. But usually you're gonna see market that it's more like this. In an uptrend, price goes higher high, create a support, and in a downtrend it moves like this. So price will always create a lower highs and lower lows, and same for the uptrend, higher highs and higher lows. And this goes for the candle as well. So here, look at this. So this is also itself is a trend. So whenever candles are moving like bullish, it means market is trending. See, we are respecting the highs and lows of the previous candle. So this candle should not break the low of this candle. This candle should not break the low of this candle. Okay, so we were talking about a breakout and retail. Let's just say you miss this entire move, right? You miss this entire move, and now all you have to do is wait for price to is just to wait for the pullback. And when the pullback happens, and it's not necessary that pullback will always happen immediately. Sometimes you have to just wait. Maybe price has already broken out in the London session, and you might get pullback in NY session. So let's just say we are talking about some perfect scenarios. Price went up and price created a resistance, bullish bearish candle form. After a bullish candle, it means a resistance form. And let's just assume that this entire range is a 40 pip range, right? 40 pip range, and then price start pushing down and further down and further down. Okay, and price come back to the area where it had just begun its move, when it all started, like over here. And when price reach at this area, you will see most of the time that price create a candle which is, I don't know why it's not able. So you'll see a candle that is forming. I think there's some issue with this whiteboard. Let me just wait. I don't know. You will see candle that has formed like this. Just consider this as a, okay, yeah, you will see a candle form like this at the support area. So this was your resistance, which now has become a support. So just consider this as your ceiling of your house. So price was ranging in this ceiling, this was your floor, and this was your ceiling. Price broke the ceiling, now it come back, and now it has created another floor like this. So this is your support area. And whenever price create such kind of market structure in the market, your entry should goes right above this, right at this candle, and your stop loss goes below this candle. And as soon as next candle starts, it should wick down, and it should keep on moving to the upside. And whenever you see there is a 40 pip range, there is a almost 80% chance that this resistance will get tested. So here's the thing, that whenever you find price creating a high or price creating a low. There is in a this is valid in uptrend, and this valid in a downtrend. So whenever you find price creating a high, it should come back, and there is 80% chance that this high and this low will get tested before, even if price want to go down. Even if this scenario is true, still you would expect that this high should be retested, and this low price needs to come retest, and this low should get retested. And this happens at 80% of the time. It's not going to happen always, but most of the time it's going to happen. And there, this is what I call a plus setup. This is a plus setup where you can take good amount of risk on this. I would say just take your regular risk, whatever you have. Risk is very subjective part, but yeah, this I would execute any day on this setup. So these are the basic kind of foundation that I have, uh, breakout impulse entries and breakout entries test. This is the only thing that I do most of the time in my trading, in my analysis, and this is how I enter into the market. There are many things. There are a few more things like fake out, and there are ways that you enter into the market with experience.